Is your Tuesday afternoon edition. Taco, trivia, and I guess market talk today. As I like to do in the month of January, and I apologize for being here at the middle to end of January. I love bringing on friends, experts in the industry to talk about where we think the markets are headed, what their opinions are, not necessarily of politics, but certainly that is driving our markets and steering the way things are going. And it has been a wild ride, as today's market activity will be a testament to. We've had this gentleman on many times in the past, not as often as I should have him on. We brought him on a few years ago as I stumbled across some videos on YouTube and become friends over the years. Guy puts out amazing content on investor videos or his website, which we'll get to here in just a second, which is going to be myequityempire.com. Talking about Colin Tedards to give us his 2026 market outlook. Joining us from Northern California, Mr. Colin Tedards. How you doing, my friend?
Merlin, it's always great to be on, and your audience knows this, but this is one of the longest running and standing programs of its kind on the internet, and so it's a pleasure to be on here since I was much younger and prettier when I started listening to you. It's actually, I believe now, over a decade ago, if my memory is correct. So it's a pleasure to be on here, and it's an honor to be with you and your audience as usual.
Oh, well, thank you so much for the kind words. Yeah, it's been as of this year, this will be joining into year number 6 for this one. I started in 2020 this show, and then for a decade before that at Power Trading Radio, which I had. It's nice when I have a full studio and multi-million-dollar production equipment. And here I am with grassroots and little tiny webcams doing the same thing since 2020. So yeah, thank you very much. Still doing it because I love talking about markets, which leads us to where we are at today. Obviously it's the beginning of the year. It's a new year, new outlook. You do tons and tons of research and analysis, way deeper than I think I would ever go myself. Where do you want to start? Are we talking equities, talking bonds, talking geopolitics? What tickles your fancy the most in this market right now?
Oh, man, I mean, today's, we can start with the last 24 hours and we can kind of stretch back because obviously we're moving into earnings season. You had Netflix report after the bell today. You had the large banks report last week, but obviously over the past 24 hours, President Trump, as every 90 days or so, throws a wrench in some things, for better or for worse. Right. And so we're going to just have to constantly be, worried about that. At least from my end, I'm sure most of your audience, or a good percentage of them, are traders. And I was looking at the charts today and I was like, well, that would have been a fun ride, to be honest, because you could have taken both ends of the trade today and had some big swings. And so, in some ways the volatility is good in that sense. But if you look at the charts, and the S&P 500 has really just confirmed a new higher high. And so if you needed an excuse to sell, this was a great excuse to take some chips off the table as we're moving into a critical earnings season. We heard last week from the banks, and it was about what you expected. The consumer that has money is doing well. The consumer that was paycheck to paycheck last week is still in the same situation. And so not much has changed. There was some comments about AI being able to eliminate some customer service jobs that I thought was interesting there. And that might transition into some of the stuff that we'll talk about in terms of the outlook for 2026. But you got a huge week over the next 2 or 3 weeks. Netflix was today, but you'll have obviously Microsoft and Amazon and all of these companies, Intel, NVIDIA, over in the next 30 or 40 days will report their earnings. And in my opinion, that will be the clearing event that, from a fundamental standpoint, that somebody like me might need to be like, yep, we're going to be buying in close to the tops of the S&P 500 because we're just going to continue to power through higher into 2026, or things deteriorate a little bit on the chart perspective, but maybe fundamentally as well. And that will create different types of opportunities as we move through this year. But just broadly, things are looking absolutely fantastic. Yeah. You look at the underlying economy, and I'm speaking broadly from a business standpoint. There's obviously things in the world and people in the world that need more help than others. But broadly speaking, you look at the economic indicators, most of them are painting a pretty rosy picture. And that's scary because I think the consensus is lower rates, higher growth, decent unemployment. All of that seems too good to be true. So we'll see how it unfolds during 2026. But as I sit here today, with obviously President Trump causing some waves in the market every 30, 60, 90 days or so, things look really good.
Yeah.
And I believe those will largely be confirmed over the next couple of weeks by the largest companies as they report earnings.
Let me share some data over here with the audience. You mentioned, the economic data is looking pretty good, and I agree. It's so funny because you hear from some elected officials on how atrocious it is and how bad it is for the markets. I'm like, what the hell are you looking at? I'm looking here at the core PCE core PCI numbers and PCI numbers. Both of those holding steady. There was zero point 0.3 for CPI. Core CPI dropped to 0.2. That's great. You had PPI numbers also drop. You had retail sales numbers increasing. That was last week. This week we have GDP numbers coming out on Thursday, which are expected to go to 4.3%, which is fantastic. The week before that, you had ADP non-farm employment change, which showed an increase over the previous number. Unemployment claims actually tipped up just ever so slightly, but less than expectations. You had average hourly earnings increasing. I mean, the unemployment rate dropped from 4.6 to 4.4. And I'm not trying to read through every piece of economic data here, but it all looks really good. There's a couple small little pieces with regards to the housing market that I'm looking at going, it doesn't look that great. But you're right. The general gist of the data is pretty robust. And I guess I'll switch it up here just a little bit. We had 3 rate cuts back to back to back. Of course, next week we're going to get another announcement from the Fed. I personally am in the camp of they shouldn't have done anything. I think they should have just kept holding and wait to see what the economic data look like. I feel like this is a bit too much manipulation based off what you just said, which is that data is pretty darn good. Let's just, I guess, shift to the Fed announcement, and I'll go back to your thoughts on all the Magnificent Seven stocks. What was your take and perspective on the need or action to cut 3 times, and will we get another one next week?
I don't think you'll get another one next week. I think the Fed is playing it safe. They could cut, they could hold steady. And so in the environment that we're in where you can kind of be 50-50, I think even if you look at kind of the votes, it's pretty close sometimes. And so I think they're playing it safe. They're going to play it safe as you move through the end of Powell's term. And they'll be, I mean, just last week we were talking about Powell getting, something against him. And so it has, I mean, there's all kinds of noise around the Fed, but at the end of the day, they are slightly restrictive. It is having impact on things like the housing market, but it's not deteriorating the rest of the economic data, most of the you that you pointed out. So they can remain where they are. And that creates this massive tailwind as you move through the rest of the year. Yeah. That if you do maintain this level of economic performance and then inflation stays about where it's at, then yeah, you probably can cut rates into this growth. And that's something that I don't know if I really want to be on like a massive short end as from a trader or certainly from an investor standpoint. That makes me want to buy any weakness that might materialize.
Right. And today was one of those days where we had a lot of weakness. I mean, most of the Magnificent Seven stuff was just getting absolutely crushed. I'll show the viewers out at home here. We mentioned Netflix earnings. They're down 4.5%, well, 4.19% after our session. And that's just to kick off the early stuff. I'll go back to a daily time frame here and show you what went on with the Mag 7, which was pretty ugly. Most of it was, actually all of it was red, at least 1.1% or more. You had Microsoft was down 1.16. So there's your Microsoft, which we talked about this the other day, breaking that 464 level. All of a sudden, you're going to be seeking out, in my opinion, that 420. Google, really the shining star, holding its own in that uptrend. Meta, looking weak, lower highs, just about to start making some lower lows. Amazon, which I am long on and not happy about what happened today. That was certainly took some money out of my pocket, but we'll wait and see. Apple, looking like a steaming pile of dog do right now as it rolled over. And you're actually right back down to a demand zone from October of last year. And if that doesn't hold, I think you're easily watching a 226 print on Apple here, which, of course, being so heavily weighted, bad news. Tesla got its teeth kicked in today, too, down about 4.17. And, of course, NVIDIA down 4.38%. So we're seeing bad news, at least in the Magnificent Seven for today. But as you pointed out, if you have a market that keeps trending like it is, and I'll bring up that S&P for you, which looks absolutely fantastic, this would lead me to believe that it's a buy the dip type of scenario. At some point that may change, but right now, you still have to have that bullish hat on, even though you have one just really bad day in the markets.
Yeah. I mean, and I think we can go back a little bit. It seems like some of the air has been left out of the Mag 7 a little bit. Some of it, and I don't know this for a fact, but obviously they've dialed back their buybacks.
Hmm.
And so as we move into this year, they are likely going to be spending more on CapEx than they are buying back the stock. That's broadly speaking. Certainly, Apple will buy back plenty of stock, and so will Nvidia. But there's maybe absent a little bit of that bid. But to me, I've been covering. In fact, I have a show every Friday where I cover the Mag 7 stocks, and I even call it the Fang Stock Recap Show because I was covering it before Mag 7 was even a term. And so I have seen this happen many times where this group just starts to slump for a little while. And it's never overly concerning to me because often what happens is there's other pockets of the market that are picking up some of the investor money that is maybe not flowing into these stocks. And to have the market start to broaden out is not necessarily a bad thing. And every single time these stocks have fallen out of favor, that is when they get more and more exciting because then you get those rallies in these stocks. It doesn't matter if it's Tesla or Netflix or certainly Nvidia, but Apple or any one of these stocks. If you catch it at the right time, you can have an 8-9 month period right after that where you tack on 30-40%
Right.
really quickly. That could start as soon as this next week.
Yeah.
Now, Netflix is in its own category. They reported earnings, but they've got that Warner Brothers deal.
Hmm.
And it really is concerning from an investment standpoint in Netflix, where they say, we're not going to buy anybody, we can grow our business organically. Then they stop giving you the subscriber number every single quarter. They constantly say on conference calls when asked about acquisitions, oh no, we're builders, we're not acquirers. And then all of a sudden they make the biggest acquisition in the company's history. And then they put out numbers today where you have declining margins. Everything else looked okay. The guidance was a little weak. And so it makes me sit back if I was invested in Netflix being like, well, what is the story here? There, like, clearly it appears that maybe there's some organic growth, and certainly the growth inside the company could potentially be slowing. And now you move into an environment where there's antitrust concerns about them buying this company. So can they raise price? Can they do that over the next 12 months while they wait to acquire this asset? Can they raise price like Spotify has been able to do or anybody else's? So it puts that stock in particular in its own little penalty box. The rest of them obviously all have their own issues. And this is probably one of the first times in several years where they all have their own issues to deal with. And I believe they'll all get dealt with on a different timeline. And that will be exciting to watch. And I think it's turned the Mag 7 in terms of a group. Like you pointed out, Google is completely broken out and the chart looks unbelievable. The rest of them, for the most part, either going sideways like Nvidia or they're starting to break some trends, very much like Netflix, obviously, but Microsoft and Apple pulling into certainly some areas where they can be exciting. So that's honestly what I'll be watching over the next couple of weeks is the Mag 7. Yeah, you could buy them as a group, but there are some tactical opportunities going forward with those stocks. I really think it starts over the next 14 to 15 days when they report further weakness can from both a technical and a fundamental perspective create huge opportunities there.
From an AI perspective, I've been nervous to say the least that we saw a similar thing, at least in my opinion, back in the dot-com bubble where everything soared. And it was just like, nothing was left behind. Even the garbage companies were just ripping. And it feels like we're in that same sort of paradox right now with AI. And then what usually happens is there's a shakeout, right? And you get the real established ones that have assets behind them or good products and services will continue to rise to the top while the other ones kind of get shaken out. You're looking at the fundamentals. You're seeing, CapEx and looking at all this stuff. I'm not. I kind of take what I read on different platforms and say, okay, well, I'm not going to dig into the financial stuff because that just drives me crazy. Are you seeing any evidence that, CapEx, I know Microsoft was like a huge percentage of NVIDIA's customer base, and, there's talk about them cutting back their spending. Your take on that, not only maybe CapEx spending by some of these big tech firms in companies like NVIDIA, which seems to be feeding the market higher, but is it slowing down? And are you concerned that there's going to be a point where these guys have said, "Hey, we've already spent hundreds of billions of dollars on it. Let's stop buying the H200 for a little bit," and then all of a sudden we see Nvidia sell off, and that brings things down.
So my view on AI is that the easy money is over, like you pointed out. Could have bought anything with AI in their, transcript, and it probably went up. Those days are over. And that applies not just to the sector of AI, because we've seen software just absolutely get decimated. AI software, whether it's Salesforce or Adobe or ServiceNow, or certainly any of the larger cap software stocks that I follow, they've all gotten decimated. Some of the speculative stuff like Palantir has done well, but it's turned into now a stock pickers environment when it comes to AI, because everybody's business model is now starting to diverge a little bit. And here's what's going to matter going forward, because in the past, it was just have some NVIDIA chips. It was, I'm doing something with AI. Cool, your stuff went up. Now, what's going to matter on a few things is if you are going to be consumer facing AI company, whether it's a Google or an OpenAI or Meta or any of these types of companies, or even like a Netflix that wants to integrate AI, if you are trying to get to the average Joe consumer or pro consumer, small business, single entrepreneur type customer, you're going to need massive distribution.
Yep.
That is what is going to matter. Everybody has the same data that they're training on. Everybody can vibe code whatever type of software that they want and features that they want. And if OpenAI comes out with a feature, Gemini will have it 3 months later and vice versa. So it's not going to be the product necessarily. It's going to be about distribution. And so when you look at the large companies, obviously with distribution, the Metas and the Googles are at the top of the heap, and everybody else is more or less a second place when it comes to the consumer. When it comes to business, and now we get into the software argument with the Salesforces and the ServiceNow, I believe that 2026 is finally the turning point for AI software. It's been completely thrown out, and in some ways it makes sense, but here's where it doesn't make sense. Is Merlin, you and I can go to the grocery store right now. We could buy a steak of any quality level. We can get prime. We can get Wagyu steak if we go to the right grocery stores, and we can come home and make ourselves that steak and maybe watch a YouTube video of Chef Ramsay showing us how to make. We can have the best chef in the world showing us how to make the steak in our house. It's going to cost a fraction of the price of the steakhouse, right?
Yep.
I mean, and this is just steak. It could apply to any type of food. We know we can cook food in our kitchens for a fraction of the price. The same argument is being made around software right now, that you can vibe code a Salesforce, you can vibe code a Slack, you can vibe code, Microsoft Copilot or whatever. You can vibe code any type of software that you're running in a business. That is going to be the same reason why restaurants still exist. Just because you and I can make a steak doesn't mean that we don't go out and eat steak and eat at restaurants. Just because somebody, a business, can do something easier and maybe cheaper than before, it doesn't mean that we are not going to have software at large organizations. And here's the other point that I would like to make is that if a business can't afford a $25 per seat Salesforce license or a $10 service from, or even $100 per seat for Adobe, is this really a business? Yeah. Is this really a profitable business? And so this will be the turning point for software, that people will realize that, yes, you can vibe code, you can get different types of software in your organization, but it doesn't mean you're going to replace it. And here's probably the safest way to play this is, look, Adobe has its challenges. And if you look at the Adobe chart, I mean, it's unbelievable. Okay. Salesforce has its challenges. ServiceNow will have its challenges. Certainly from a growth perspective, they are going to have a core audience, but obviously as more software grows, it's going to be difficult for them to grow even further. But at the end of the day, the consumer is going to have a choice and the business is going to have a choice, and a business is going to go out and purchase software just like they have in the past. And yes, they can make it cheaper in-house. Yes, they can do it even faster, but that doesn't mean that they will. What they will do is focus is specific internal things at the company. Costco reported their earnings This was just a couple of weeks ago. Costco reported their earnings and they said, like, look, in our pharmacy business, we implemented AI and we saw this massive improvement in service and profitability. And now we're going to go layer that over to our gasoline business. So there'll be these specific use cases, whether it's Costco or Walmart or Amazon or any of these companies. But at the end of the day, software has its highest opportunity in 2026 to finally have a turning point. And I think probably the safest way to play it, like I said, Adobe, Salesforce, they all have their problems. The safest way to play it is probably the infrastructure software layer. So this is going to be your database companies. This is your Databricks that is private, your Datadog, your Oracle, your Snowflake. That to me is the layer of software that is probably the most exciting right now, because Adobe has challenges that they'll probably solve. Will it be this year? Will it be next year? I don't know, but they'll need more database software. They'll need more software infrastructure. And that's where I'm focused on this year. I think that's probably one of the biggest opportunities. And I mean, the fact that software has been thrown out just shows you that AI is still not fully understood. And we're still trying to figure out what the ultimate prize and what the ultimate conclusion is going to be. And I can't tell you how exciting that is from an investment standpoint, because for the past couple of years, it's been on autopilot over at Apple. It's been on autopilot over at Google. And for the very first time, we're now having to ask very important questions about these companies. And now we are going to have real winners and losers decided. And I think it starts this year.
Man, a lot to unpack there. Looking at some of those names, and as Steve just pointed in the chat, he says, Snow, Oracle, CRM, Adobe, DDOG, these, they're just getting annihilated. Like it's just, it's horrific looking at some of these charts. And as a shareholder, here's Datadog, for example, and just since its peak in November of last year to where we closed at today, you're talking a 42% slide. You got Salesforce, which looks like a bad EKG, and really in the past 10 days has fallen off a cliff from over 265 down to 220. Adobe, no saint either. ADBE, same thing. That 2-week window of time from 360 down to 290. Obviously, as someone who thinks the software has a lot of potential here, at what point do you look at this and go, okay, now I'm interested? Because for me, my philosophy on markets. I'm a trend is your friend till the bend at the end. And most of these, particularly Adobe, it looks like a sinking ship. I mean, it looks like a downtrend that's just going to keep on going and going and going. And picking those bottoms can be very difficult. So I guess, what sort of things are you looking at that says, okay, now is that time? I am getting confirmation that software with AI is that kind of that turning point, and here we are. Because when I look at these charts, I'm just like, I want to vomit if I'm a shareholder. I mean, this stuff is atrocious.
Yeah, absolutely. And so I would say, to give a specific example with Adobe, I believe there's a support. I don't have the chart in front of me, but I believe there's a support area at 260.
Yeah.
That's a
274 is what I got one. But yeah.
Sure. So anywhere in that range, I'm not saying I'm catching that knife, but that's an area where I'm watching very closely. Do you get the bounce here? With Adobe, I'd like to break higher than or out of the downtrend that it's been in for at least a year and a half, 2 years. I'm waiting for a break above that, and then you often kind of have a back test of trend. And so I let price decide. I am certainly not saying go out and run out and buy Adobe shares today or go buy Salesforce today. I agree with you. The charts look absolutely ugly. But for the most part in my career, the stocks that go on epic runs, the chart often looked like absolute garbage right before it actually did it. And so the signals, everybody has different signals, and certainly your audience and you yourself are going to have way better signals than I do. But I look at the charts enough. For me, it's creating a new series of higher highs. It's breaking out of the downtrend that you've been in. Many stocks have kind of done this. Maybe Boeing, off the top of my head, was in a massive downtrend and then finally has had some nice price action out of that. Intel is another one. You finally get kind of a basing and then finally a breakout. I mean, the Intel chart was ugly.
Yeah.
And then it wasn't. Now it's up 100% in probably a year. And so that's the type of opportunity that I see here with software, is that we're not talking about market or even slightly above market returns with this. if it plays out how I think it's going to play out, that eventually investors are going to realize that enterprise software is very much like cooking your own steak, that, yeah, we do it and we can do it, but we're probably not going to do it on a regular enough basis to really kill off these companies, that they still have really solid balance sheets. They still have the opportunity to now go out into the market and buy other companies and expand their business. And after all, they all have, their programmers vibe coding the crap out of stuff right now too. And so at the end of the day, it comes down to distribution. Kind of one of my first points is, with enterprise software, it will come down to distribution. And the companies that already have that are going to have an advantage. And in fact, we're seeing this at little spaces of software where vibe coded stuff, very similar to Meta's acquisition of Manus a couple of weeks ago. That was essentially a piece of vibe coding software that Meta bought for $2 billion. Manus sold to them primarily. I mean, look, no one's going to turn down $2 billion, but at the same time, now you get access to over 1 billion active users on a single day. Yeah. And so now what can you create and what types of products can you launch into the marketplace? That's what we're going to see in 2026. There'll be a consolidation, and I believe the consolidation will actually favor the stocks that have fallen out of favor. But I'm certainly reinforcing that the charts have to tell you when to buy. And right now they are not saying buy, but that's oftentimes, in my opinion, that's when it gets the most exciting. Yeah. Because you've been on such an extended drawdown, particularly on stocks like Adobe, that you have to figure at some point. They're very similar to Intel. I turned bullish on Intel a year ago, primarily and really only because it can't get much worse. If it gets much worse, Qualcomm or Nvidia or some other company will just buy them straight outright. At some point, you have some liquidation value with these things. I don't think we're there with software, but boy, oh boy, you continue much lower, and you could discuss that with some of these stocks, that they're almost worth more than kind of a liquidation value.
Yeah, and I've got the Intel chart up here as well. And, we talked about this a lot with our audience over the past couple of years. And, really from September 2024 through, September 2025, or a year, it didn't do anything. I mean, it just kind of stuck sideways. And the general consensus, at least for me, and my viewers will remember this, we were saying, look, I wouldn't touch it right now until it breaks out. I mean, it has to prove that it's now out of that downward and sideways channel. So that was about 27.55, and you had the nice breakout, and here we are on that weekly basis. And going back to your Adobe ADBE, we have zero indication, literally zero, not one, that this is it. That this is the bottom. And you could make the argument for those that are looking at this low point back to September of 2022, you're like, oh, at 274, it should bounce. Okay, I'll give that to you, but you're definitely catching a falling knife. And if you are that one that says, I'm going to buy at 274, you better have a stop loss in place before that thing drops at 260. And, for me, I'm looking at this Adobe. I'm not interested at all. However, if we do start to see some bounces, I need it to start making a new high. I need to prove that trend that it's been in since September or since 2024 is finally broken. And at this point, yeah, I'm not touching it. But I agree with you. I think that there certainly is going to be a phoenix rising from the ashes with some of these companies. But man, trying to pick those bottoms can be an extremely difficult thing to do. And especially when you look at some of these charts. I mean, they're just really atrocious.
Right. And I think maybe to crystallize kind of what I'm saying here is that the charts are saying no, but the fundamentals, I feel, from a sentiment standpoint, because the financials are not bad. I mean, we I won't have to go into Adobe's financials or Salesforce. They're actually not that bad. The forward estimates are not completely unreasonable. These companies are actually doing pretty well, and a lot of them are not doing the CapEx spend that the Amazons and the Googles and the Microsofts are doing. So they are going to generate large amounts of free cash flow to buy back the stock, do a dividend, and then maybe even more importantly, go finance some type of acquisition to bring in that growth a la Netflix. Now, the market will treat it how it wants. And that's why I love a show like this, and I love your audience, because you're going to let the price tell you when the sentiment has actually changed. My job kind of as a research analyst is I'm always trying to stay 2 to 3 months, maybe even 6 months ahead of when that is likely to occur. And if I were to slap money down, and I have on some of these investments, but I believe that catalyst with software is coming in 2026, where the market wakes up and says that, yeah, these companies have challenges. Yeah, they are going to have a lot more competition. They've had competition for their entire history of their company. So that's not changing anything. What they are going to have is a huge opportunity to capitalize on the fact that business to business software in particular is not going to be vibe coded out of the enterprise. That just like we go out and eat steaks, just like I have somebody dry clean one of my shirts, just like I might have a guy at the car wash my car. I can wash my car. My kids can wash my car. But just because I can do it, and just because it would be cheaper and maybe easier to do it myself, doesn't mean there isn't that incentive, particularly at the business level, just to outsource that to somebody else. So if you're JP Morgan, if you're Wells Fargo, if you're Netflix, or if you're any of these companies, you just do it yourself.
Yeah.
And honestly, speaking of Netflix today, they're the prime example of this. I think they just came onto their 16th or 19th year, I can't remember, of them transitioning to streaming. And at the time, they transitioned from a DVD rental company to a streaming company. They didn't own any of the content. So they were actually licensing all of the content from Disney and other companies. They didn't own the servers in which Netflix was being played on. Those were owned by AWS. They didn't even really own the distribution platform. That was going through computers and a little bit at the time, and certainly over the future, iPhones. And so Netflix didn't own crap. They didn't own the content. They didn't own anything. And they scaled up. If you look at the performance of Netflix, like during that time, from transitioning into streaming to COVID, and maybe even just a little after that, it's got to be one of the best performing stocks of that period of time. They didn't own crap. So this idea that, oh my God, you got to be vertically integrated. Oh my God, you got to own the data center and the chips and the power, and you got to do all this. Yeah, Google can do that. Google's the Michael Jordan of the stock market. It can go play baseball. It can do all this different stuff. Not everybody can do that. And there's a lot of value in actually not doing a lot of that. And that's where I think a lot of these software companies are going to find themselves. They don't have to buy the chips. They're not training the large language models. They're just renting it from OpenAI or Anthropic or Gemini. And those companies will gladly rent that to them. Their job is to go and convince an enterprise client that $25 a seat is going to make them $50 to $100 a day in productivity. And honestly, that's what we're seeing. And so there's real results around AI. There's real results around software. And those results will continue to prove themselves out in the earnings. In 2026, the fundamentals will change the charts. That'll create a huge opportunity. But obviously, I'm with you, and I'm sure I'm with most of your audience. You have to wait for the chart to tell you that. I'm here to tell you the fundamentals are very close to doing that.
Well, I got the Netflix chart up here. They switched over to streaming in 2007. And from 2007 to that 2020 point you talked about, April of 2027, tiny rate of return, just 14,735%. I mean, terrible. I mean, God, I could do better with
Yeah.
Well, as we roll into 2026, are you still, I guess I should ask, what do you think is going to be kind of that major driver for our markets? Is it still going to be AI? Is it still going to be consumption of tech and semiconductors and chips and growth in that sector?
I sound like a broken record, and please.
Okay. It's good to be a broken record. If the record is good, I played out Led Zeppelin 4 until the groove was gone. So good record can be played over and over.
This is true, and I hope I have that type of longevity. And I'm looking every single day. Is AI a bubble? I don't care if AI is a bubble. If it is, we'll figure out a way to make money on it. Right now, I am seeing not just an acceleration. I'm seeing now exponential acceleration in terms of AI having a wider benefit across not just the consumer, but particularly in the business side. I listen to a lot, and I try to read a lot of quote boring business conference calls, and get to hear them say about the benefit that AI is having on them. Just to give an example, which I think I pointed out, there was certainly the Costco one, but Bank of America called out that their AI agent on their phone and their app has directed them from not having over 2,000 people in the call center handle different types of customer service. That is all now flowing into a lot of their AI. It's, hey, change my routing number, forgot my password. That used to maybe have to go to a human. Now it's going to AI. And they've replaced those people with customer facing, maybe wealth management, maybe sales. And so AI is going to have a massive impact on what I would call the mid to low end employee. And we're speaking in business terms. There's no in mid to low end, in society, but in business terms, there is mid to low end employees. Their job is cooked for the most part. If you're a mediocre employee, AI is 24/7 and it's cheaper, it's faster, and whether or not it's better, it doesn't matter. It's 24 hours a day and it's only getting faster and cheaper and better.
Yep.
And the mediocre employee is not. They're cooked. And so that's going to create a divergence. And I think we're seeing it a little bit in society. Some of the soft consumer data, like you said, you read off GDP and all this stuff, and it's fantastic. Well, if you're a mediocre employee, you're not feeling any of that. Right. You're feeling like crap. AI is screwing me. And I think we see it in some of the elections as well. And every city is different, but you look at New York City, and people on the outside are like, how could they elect a guy that's promising free buses and whatever he happens to promise? I could totally see it. I could totally see it. If you, I didn't spend that much time in New York City last year, but I was there for like a week. I could totally see the people that are living in New York City are not necessarily experiencing the same economy. And that is going to have a huge impact on AI going forward, is that you are going to have massive, massive benefit from this, massive investment, massive stock market gains. It's really just beginning. NVIDIA is going to have an unbelievably good year.
Yeah.
And there's no doubt about that. We've already heard from Micron. We've already heard from Taiwan Semiconductor. They're the forward indicators of that. And I've never seen some so bold. I don't know if you saw this, Merlin, but on Taiwan Semiconductor's conference call, the CEO was like, the customers of NVIDIA are calling us, telling us their business are so good right now that we need more chips. That would be like me calling Taiwan Semiconductor and being like, I love my iPhone so much. Please let Apple make more chips so I can buy another one. That's exactly what's happening right now.
That's crazy.
It's unbelievable what is happening right now. That yes, the customers of NVIDIA are calling their manufacturer and being like, please give NVIDIA more product so we can buy it at 75% gross margins for NVIDIA. It is incredible. And that is just showing you. And when obviously, it's coming from the top companies, but I spent a lot of time talking and listening to mid-market AI companies, mid-market, non-public. They are saying the same thing, that their businesses are absolutely exploding and blowing up, and they're turning away customers. They're turning away opportunity because now they can write some code that sends off 50,000 emails in a week that sounds like a human. And now they're getting in, instead of getting 500 leads a day, now they're getting 5,000 leads a day because the computer is 24 hours a day, 7 days a week, and it's 15 cents an hour to run. And so instead of a sales force of 10 humans, they've got a sales force of 20 agents that are working around the clock at a higher efficiency and are constantly learning and getting better and becoming a superstar. And that is what's happening in AI. And exceptional high-level talent is killing it with AI.
Sure.
But at the same time, the quote mediocre and lower end employee, or the lower motivated, maybe the more politically correct way to say it, the lower motivated employee, they're not getting hired. They're not getting looked at. And in a lot of times they're replaceable, and they allow that person to churn off because the high performer with AI, and then AI on its own directed by agents, is so much further and above where it was even a year or two ago that businesses are seeing off the demand charts. So this, I wish I could get on and say, AI is slowing down. We could rotate into this, that, and the other, but I'm not seeing it. I'm not seeing any tangible evidence of it. And I think it will be confirmed next week. Now, I don't know what will happen to the stocks if they announce that, yeah, we're going to spend all our free cash flow in 2026 on AI. The market might hate that, just like they hate Netflix buying Warner Brothers. Right. It's hard to say how the market judges these things, but just from a pure fundamental standpoint, AI is the biggest trend that I have seen, and it's bigger than the internet.
Agreed.
And I was around for the internet. Yep. And this is bigger, and it has more
overall
money.
Impact, absolutely.
Yes.
And I think that the challenge is we're still trying to figure out how all those chips lay. And I've got a couple of viewers that always call me Mr. Doom and Gloom, and I echo your sentiment of this is not. It has bubblicious properties, but still there's so much more spending going in. I've been looking at an AI software to digitize instructors. So when I build training materials, I can use avatars that people won't be able to tell the difference. And one of the services that they offer is live real-time avatar customer support. So you can program in, give it a large language model of all the different questions that have come into your call center that your desk has just had nightmares fixing. And I could have a live video AI that pretty much does exactly what I'm doing right now with no lag time, no latency, fully interact, and that person thinks they're talking to a real human. Gone are the days where it's like, if you're interested in the movie starting at 3 p.m., press 1.
Right.
If you're interested in the movie starting at 4 p.m., press 7. It's like, no, it's just full-on conversation. So there still is a lot of room to progress there. And I don't want to sway your opinion. I'd like to get your raw take on this one. I love it. I'm optimistic. I think what we're going to get for a period of time is significantly robust earnings from these companies that are implementing, utilizing AI, cutting their workforce by 20, 30, 40%, and bringing in 24-hour automation that is cheap and easy for them to use. The concern I have is at what point does this crescendo with corporate profits are off the charts, the stock charts look amazing, but this low to mid-level employee is starting to become bigger and bigger of unemployment. And we see unemployment go from, let's say, 4.4% today to 4.8, to 5.2, to 9.5. And my mind is like, well, where the hell are these people going to go? I see it every single day. I tell people every class I teach, every interview I do, I'm like, if you're not using AI, you are going to be left behind. Use it or lose it. And I get this feeling that the laziness of some of the millennials and the current generation, that just like, man, I don't want to do anything, they're not going to get work and they're going to struggle and more layoffs will happen. And we get to this point where you have so much unemployment. How do we service that unemployment? And I don't know when that's going to come, but I feel like it's a few years away where AI advancements are so unbelievable that a company's literally going to have 5 employees just to run the AI systems and the other 2,000 are all gone. When does that come, or am I just kind of being too doom and gloomish?
No, that's coming. It's here at certain levels and certain degrees. But what you described there, where you have, let's just say 2 exceptional, if we're talking like kind of a mid-market business, 2 exceptional employees managing an entire system, right. Even if it's a manufacturing business where you're doing CNC machines and 3D printers, you can automate most of this now with AI. And then certainly if we're talking about software and sales and market research and all these types of things, you're going to have somebody at, it's almost like a plane, one of these big jumbo jets that is flying itself, conceivably you could have almost anybody sitting there. Maybe a better example is the Teslas. The Teslas drive themselves. You can have almost anybody sitting up there when it's driving itself. And that is where AI is going. And it is going to also collide with an even broader discussion with robotics and automation in the physical world as well. And all of that is going to collide. I do agree that we are already seeing witnesses that it is creating a divide in society between the haves and have-nots, amplified by the fact that the baby boomer generation bought all of their or most of their assets when money wasn't printed in its highest quantity. They acquired all their homes and their assets that have, dramatically out appreciated basically anything else over the past 25 years. And so they're sitting on 4 homes, 100% equity, couple gold coins. Like they ain't tripping about anything. Okay. They're going on cruises. And I think, one of the airlines reported today, and first class seats are doing fantastic. That we're going to get into that, and it's going to create a bigger divide. How the politicians frame that Not sure. That's a broader discussion because I think both parties when we get into the kind of the next major election cycles, both parties could splinter. You have progressive Democrats, you have what maybe mainstream Democrats, I guess. Then you have MAGA Republicans, and then you have maybe old school Republicans. How the parties could go in two different directions.
Yeah.
And how the voters support the different policies, I'm not sure. I could see a scenario, Merlin, and this is what people tune in for, okay? I could see a scenario where the people that are crushing it with AI are crushing it so well, and they're so focused on it that they're like, yeah, tax me a little bit more and pay the lazy guy to sit on the couch, because isn't that an advantage to me? If 30 or 40 or 50% of society wants to just sit on the couch, collect a universal basic income check, while I sit over here and crush it with 15 AI agents and 4 Optimus robots and autonomous cars out there, like, is there a trade-off there that is worth it? And I'm talking just from a business standpoint, maybe there is. Maybe I do get my taxes raised 5, 15, 20%, but because the AI has grown my business 200, 300, 400%, and I'm just kind of managing everything. I'm not actually out there digging holes or designing the software per se, or even selling the software. The AI agents are doing all that. Maybe that is a price that we are willing to pay,
right?
And society will become willing to pay. Yeah. I don't know the answer to that question, but that's certainly something I've been thinking about a lot.
Me too. And I saw a recent interview with Elon Musk. I think he was on Joe Rogan, where he talked about that scenario of universal basic income. And he goes, you're looking at it all wrong. He goes, we're going to get to a point where the companies are making so much money that they're paying so much more in taxes that it will give everybody a lifestyle to not work and collect income. Mm-hmm. I'm like, that flies in the face of everything I was raised to believe. Like, work hard, make your money. Now it's like sit on your ass and get paid to do nothing and do all the things you want to do. That sounds great in principle, but I just don't know. I don't see how that's going to work.
I think it'll fall somewhere in between that. It'll fall somewhere in between where things are today and Elon's Musk vision. I think he's called it universal basic high income. Mm-hmm. I don't know how that would work. And I'm certainly trying to internalize and try to maybe draw on history, if you will, to try to come up with some vision of how this works. But I do see a scenario of some kind of substitution income for what's coming with AI. And I say that from somebody that for the past 7 days or so, I've been vibe coding a mobile app. And I've had maybe 15 years of experience designing websites before that. I hated designing websites. I got tired of it. At one time, I was super passionate about it, and it was a great business for me. But after a while, I got sick of it. The vibe coding of this mobile app has rekindled something that I haven't felt in maybe about 10 years. And I can tell you, it is unbelievably extraordinary just how much improvement they've made in the past 4 to 5 months. But a mobile app might have taken you a year, 2 years to plan, develop, and deploy, and you would have had to do it in stages and roadmaps. Right. You can now launch a flagship mobile app in 2 weeks for $1,000.
Wow.
And it have all of the features that you ship all of the features all at once, not little by little. The value of that is not even being understood by the market, and nor should it. These Morgan Stanley and these Goldman Sachs guys wouldn't know how, the difference between a cron job and a Python script. Okay. They don't know the difference between that. But if you go down to the developer world, it is what is happening there is blowing my mind on a weekly basis, where something comes out and I'm like, wow, that is so much better. It's so much cheaper and it's so much faster to do these things. That takes time to filter out into the business community, but we are going to see full feature apps and websites and services get launched that would have normally taken years and millions of dollars and a lot of luck to come to market. Now you're going to be able to spin that up in 2 weeks.
Wow.
For $1,000 with some, if you're like me on a scale of 1 to 10, I'm like 5 from a computer programming experience, but with the tools, I'm a 10 out of 10. I'm like a Stanford level. And I'm not trying to exaggerate here, but I'm now at a Stanford level graduate in terms of coding, it took me from a 5 to a 10. So it turned a product guy into a coder. I don't think the market really understands how powerful that is going to be going into 2026, where I don't have now I can be a product guy and a coder at the same time,
Right.
where you had to pick your lane. Even a year or two ago, you picked your lane. Now you can be you can be product and code. You can be code and product at the same time. It is magical what is happening.
So I will
And
expect a lot more innovation, a lot more products and services that are just like incredible in the next year or so.
unbelievably, what you are going to see is not necessarily from the high end, but you might have a creator or something, maybe a hobby that you follow, and they're going to launch an app or a mobile app or an experience online, and you're going to be like, dang, that's like $1 million app that they shipped. And it cost them probably $1,000 and 30, 40 hours on the weekend doing,
Man, now you're going to make me build an app. Thanks, Colin. Thanks
you
a
can,
lot.
I promise you, you can spend 30 days. If you have zero experience, you can spend 30 days to upskill yourself and learn this stuff. And with the tools of Claude Code and the wrappers, and I'm using Replit, I'm telling you, it's unbelievable. If you have some existing knowledge, it takes you to a 10 out of 10 almost immediately. If you have no knowledge, there's still some learning, but it wouldn't be much, honestly.
Man, you're getting me all fired up to go into coding. I don't want to keep
Okay.
us on here for too much longer. I mean, I've already got your time consumed. Last year we did a market forecast of where we thought the S&P, two things. We thought where the S&P was going to be going and where the NASDAQ was going to be headed. So I guess I'll start with the S&P for you. Obviously you got a little bit of a head start because we had a 2% down day today. From a year perspective so far, we're already off to a little bit of a downtrend. But if you could look into the future and say, all right, what happens by the time we get to the end of this year with the S&P 500? What would you give it as a price target that I could put on my screen here?
Yeah, so I'm gonna go. I'm gonna go out on a limb this year. I'm gonna say we're gonna have an epic year
Oh,
broadly in the stock market. The broader market is going to spread out in terms of performance, but then the Mag 7 will catch up towards the back half of the year. Everybody will realize they still got pretty darn good businesses that are accelerating. I'll say we'll have a mid-20s growth rate on the S&P 500 this year.
so you're like 25%?
Yeah, sure. We'll do a 25% number, plus or minus 2% or something. I think there's a chance, even though I'm like fully skeptical of it, there's a chance the Goldilocks scenario plays out where you have high growth, decent enough unemployment, and you have the potential of lower interest rates, lower inflation, deregulation, all the stuff people talk about. And then I think too, some optimism from Democrats that their party is about to nominate a new candidate at some point. That conversation toward the end of this year will start to percolate. It already is, but towards the end of the year will percolate. I think that will help sentiment, because if you were fully negative on Trump, and this is why I don't read sentiment that much, and I didn't pay attention to it under Biden, because a MAGA Republican hated Biden. The minute Trump comes in, now, the economy's amazing.
Yeah.
Same thing with Democrats. Under Biden, it was okay or good, and now with Trump, it's terrible, and it doesn't matter what happens.
Yeah.
They're not going to change their mind. If you start to get the country on the idea that, hey, my candidate could win, once Trump is out, my candidate could win, and we're transitioning to something new, that creates an underlying optimism that is certainly not there today. And so that all of that combined, sentiment, the momentum around AI, the paradigm of software basically being like restaurants are still going to exist. People are going to be able to cook their own software at home, but they're still going to go out to eat for a lot of it too. And so that paradigm plays out. The Mag 7 is going to be fine. I'm not worried about them at all. Any sign of weakness on this is minus Netflix is in its own little penalty box with what it's got going on, but the rest of them, any sign of weakness, it's a rebuy for me.
All right. Well, I got you at 80 or 25.64%. That would be 8,600 on the S&P.
All right.
And now Bitcoin. What do you take on Bitcoin? It's been
where's
a
it at?
struggle
Yeah,
bus.
it's under 90 today. I think it was
88,000. Yeah.
Okay, it's tough because I feel like, I'm not a crypto guy, or not like a broad crypto guy. I pay enough attention to Bitcoin, but the consensus I'm seeing is that a lot of the alpha has been drained out of it because of these ETFs and all that other stuff. And so the alpha and the volatility has been kind of pulled out of it. Also, the implied difficulty to sell it, go back 4 or 5 years ago, it was kind of hard to buy and it was kind of hard to sell. Now with clicks of buttons with ETFs, you're doing it almost 24 hours a day.
Right.
And so I think that drains some of the allure and the alpha out of it. And so I think if the S&P 5 is up 25, gold and silver has probably pulled some momentum out of it as well. I think you've probably got like a 13-14% move on and I'm talking about Bitcoin specifically, probably a 13-14% move back to the upside. But my guess is you have overhead resistance at 100 or 100 and I don't have the chart in front of me, but I'm assuming the previous highs in the hundreds. It's going to be hard to churn.
Yeah, previous high was 124.
It's going to be hard to churn past and above that, in my opinion. With S&P, with my view of S&P and broader equities starting to attract more and more investment and more efficiencies, more profits, lower interest rates too. Am I borrowing money to go buy Bitcoin, or am I borrowing money to go build a factory where there's huge tax incentives and all this other stuff? I think that's where the money's going to flow. I just don't know if this story is exciting enough in Bitcoin. Maybe some of the other smaller coins that I'm not aware of. I'm sure there's huge opportunities there. But Bitcoin especially just appears to me to be, the alpha's been drained a little bit out of it.
Okay. I got you 13% for the year. That put it at 99,000.
Hey, that's a good number. That's a good number.
I got 99 problems and Bitcoin ain't one.
It probably isn't one if you bought it a while ago.
All right. So where can I direct people? I have my Equity Empire up here for those of you who want to know. It was actually on the screen there as well, myequityempire.com underneath his name. You can visit that one. Of course, he still does tons of videos. You can find him on YouTube, which is going to be the investor videos. You still doing those regularly?
I'm doing a Friday show. I recap the FANG stocks every Friday. I recap the news. I don't make any money doing it, but people ask me why I do it. It's because it allows me to remember everything about the biggest 7 stocks in the market. If you're reading the news, if you say it, and then I listen back to it on my edit, this is why my recall on everything that they do is so high, because every single week I force myself to sit down and spend about an hour just making sure I know exactly what's happening with those 7 companies. And when you understand what's happening with those 7 companies, underneath them is obviously a huge layer of basically the entire stock market. And that's where I'm at. I produce a lot of content on the premium side, earnings videos. I'm going to cover Netflix and 3M stock later tonight for that. So I cover a wide range of stocks, but really publicly, I talk mostly about technology and AI, because that is where the best, absolutely, we're going to look back and when it's boring again in AI and it's kind of a really old story, we're going to look back and be like, wow, that was an exciting time. There was so much news and so much things happening.
We've got years before that happens, I think. Years.
I think we've got a long time to go before we're talking about dividends and buybacks over at Mag 7 being kind of the topic du jour. Yeah. They've got a lot of investment, a lot of product, and a lot of opportunity that they're going to try to get. And I think 2026, they're going to get a lot of it.
Nice. Love it. Well, it sounds like bullishness for the year, for the S&P particularly, a little bit of bullishness for Bitcoin. As always, I thank you for coming on the program today, sharing some tremendous insights into the markets. We appreciate that, and hopefully we'll get you back on again soon.
Anytime, Merlin. I really appreciate it. Appreciate you, appreciate your audience, and appreciate all you've done to educate people, entertain and educate people on trading. Certainly my start at actually finally looking at charts was by listening to Power Trading Radio all those years ago. Nice. And just appreciate you and your show and your audience, and it was a pleasure to be on today.
Awesome. Well, thank you so much. Appreciate it, and we'll talk to you soon, my friend.
Thank you, Merlin. I appreciate it.
Oh, yes, absolutely. Guys, that was Colin Tedards. He's on the investor videos. You can also find him at, I got the page up here right now for you, which is myequityempire.com, which is his service. Worth checking out there. So hopefully you guys enjoyed that, learned a lot today. And of course, another hour show. I was going to try to keep this show a little bit short, but 2026 market outlook with Colin is always a goodie, and just understanding his perspective of things. And it does align with my thoughts. I do think we'll see a little bit more more of a bump with AI this year, but the question is, does it continue to drive the overall markets, and does it have a big enough pullback that actually makes the markets negative for a little bit this year? We shall see. Let's look at your earnings calendar for tomorrow so I can make this a quick ending here. We've got a bunch of stuff happening tomorrow after hours. You've got Johnson & Johnson, Charles Schwab, Kinder Morgan, Halliburton, Travelers. So we got a bunch of insurance here with Citizens Financial Group. That's really your big stuff that's happening after or tomorrow on the earnings front. On the economic calendar, I've ripped everything out except the U.S. market. So let me remove my filter here and show you what's cooking for your Wednesday session. That's not the 31st. We'll go. That's went back to December of last year. How did that happen? Let's go to our Wednesday calendar here and show you the exact news. You have the World Economic Forum annual meeting. That'll be interesting. Right now, you have a lot of very prominent people in Davos lobbying for cryptocurrency, digital assets. Of course, Brad Garlinghouse of Ripple is pushing all the politicians to make the Ripple the payment system for the global community. We'll see how that goes. But you have ECB President Lagarde speaking. President Trump will be speaking tomorrow. You also have pending home sales, construction spending. A lot of major names and influencers will be speaking tomorrow. So be very careful. I would encourage you to check out the economic calendar here to make sure you know when they're speaking. Obviously, the first Lagarde presentation happens at 2:30 in the morning. I'm not so worried about that one. It's the one that happens middle of the day that is of concern. President Trump will be speaking an hour before the markets open tomorrow, and then Lagarde speaking again at 11:45, and she has had some pretty negative things to say about cryptocurrency and digital assets. At 1:30 tomorrow, you also have the German Bubba President Nagel will be speaking, and that, these big power players can cause big ripples in those markets. Ollie types in XRP in the chat. Yeah. Look, you guys know my thoughts on XRP. I don't like it. I don't like what they stand for. However, I do own XRP, and I think that Ripple will probably continue to do well because the Ripple Chief Executive Officer, Brad Garlinghouse, is literally buying votes. He is putting money in the pockets of politicians to make sure that Ripple comes out of this unscathed, because Ripple is a security. Anyone want to argue with me on that one? Let's do it. I'm happy to have a conversation with you guys on that one, but the Howey test basically says if there's a team in place that is building and working to make sure that that thing goes up in value, that's one of the qualifications for Howey test, which makes it security. Ripple has a CEO. That means it's a company. So, yeah, I'm not a big fan. Alex says, World Economic Forum feels shady like the Bohemian Grove to me. I would agree. Too much money in one place, making too many important decisions. Yeah, and in theory, Alex, it's supposed to make the world a better place. I don't trust these people. I think they're trying to make themselves more money and an even better place. Come on, I was on a vacation yesterday. I actually had to work. I worked all day yesterday. So, all right, we are already at an hour and 3 minutes for today's show. So we've got your economic news out of the way. We have your earnings news. Yes, I did get for Lisa, I did get your thing regarding AI analyzing your trade log. I loved it. Thought it was very interesting. I'm going to try to do something similar on one of my accounts and see if I can share that with you guys and show how AI could be utilized for that. But, per the conversation today with Colin, AI just becomes more and more integrated. It becomes more of a useful tool, whether you're making music, you're doing art, whether you're doing accounting, whether you're coding. We'll see in the next 2 years, you'll start to see unemployment numbers surge. And that will be when the turn comes. But right now, it's great. Efficiencies, better profit margins. These companies are going to do much, much better from an earnings perspective because they're getting rid of expensive, lazy employees that drag on benefits and healthcare and putting in an AI system that doesn't need any of that. So it'll be a very interesting year for sure. All right, we are going to wrap it up for today. Thank you guys so much. If you have something you want me to discuss on tomorrow's show, email me at tradermerlin@gmail.com. Certainly, as Ollie says, better learn how to trade. Absolutely. Trading, I think, is immune from all this, even AI algorithms and stuff like that. I'm not so concerned about it. We are such small participants in the market. We can be mosquitoes and ride the coattails of AI. AI is searching for the big stuff, the big money movement. Just figure out what AI is doing and ride their coattails. Easy peasy. Let's do it. All right, guys, that's going to do it for me. Have a fantastic remainder of your day, and I will see you guys tomorrow. Again, send in your comments, questions, feedback, either to tradermerlin@gmail.com or down below any of the YouTube videos. I'll see you tomorrow.